Sehr geehrte Damen und Herren,
Ladies and gentlemen, may I have your attention, please? My colleague, Willy van Riet, and myself will present the first half of 2012, an overview of the markets, of our environment, and our plans, what we intend to do, and then we'll be available to take your questions. The first half of the year was marked by the following developments. Wienerberger was able to increase its revenues group-wide by 5%. I'll explain the measures we have taken. An important milestone, which I will be discussing in greater detail later on, was the full takeover of Pipelife and the consolidation of the company within the Wienerberger Group. Another foreseeable development was the weakening of economic activity and residential construction, in particular in the wake of the euro crisis, and downward trends were noticeable in all European markets. Developments in our two small operations in Russia and India were favorable. We saw a dynamic market environment there with double-digit growth. In the United States, the market had bottomed out, and in the last quarter of 2011, we already noticed a slight recovery, which has been confirmed this year. So after the bottoming out of the market, there is a slight recovery in the U.S. My core message to you, ladies and gentlemen, is that in this difficult market environment, we've been able to increase our prices on average by 4%. This is a strong signal sent by the company. It's been possible for us to increase our prices in a difficult environment, and we've also been able to gain additional market shares. When we look at the core business of Wienerberger, we have our traditional clay block business in the wall segment. In this segment, we are particularly dependent on the cycle in housing construction. In our roof tile segment, which we've been expanding in recent years, and through the integration of the 50% participation in Tondach Kleinstetten, we have developed a strong presence already also in Eastern Europe. This is a business segment that is highly exposed to the renovation market, which is less susceptible to cyclical impacts. In the pavers segment, mainly under the Semmelrock brand in Eastern Europe, infrastructure projects are important, but also minor do-it-yourself operations and, of course, renovation. And then finally, pipes, Steinzeug, Keramo, and Pipelife, two providers in the field of pipe systems. Here again, a strong exposure to the renovation business. So renovation is much more important there than in the core business of Wienerberger. This means that through Pipelife, we've acquired a second pillar to stand on, which is less cyclical than new residential construction. Let's take a look at Pipelife and the development this year. Revenues were increased by 7% during the first 6 months of the year, mostly due to the strength of markets in Northern Europe. Pipelife is very strong in Norway, Sweden, and Finland. These countries have taken a favorable development. EBITDA was increased by 20%, EBIT by 31% to almost 27 million compared with 20 million during the first half of 2011. So a very satisfactory development of this company. This development is going to slow down slightly in the second half of the year because we take it that some markets, particularly in Central and Eastern Europe, Czech Republic and Poland in particular, as well as Southeastern Europe, these countries will feel a cyclical slowdown also in the field of plastic pipes. As regards our revenues, as I said, a 5% increase in our ceramic building materials business. We did suffer a 9% organic volume decline in our core business. In all segments of the ceramic product portfolio, clay blocks, roof tiles, and facing bricks. Through the integration and consolidation of Pipelife, we were able to compensate for that through 10% increase. The 4% price effect is also quite significant, so decline in volume by 9%, 10% consolidation effect, and plus 4% price effect. One thing that hurts us these days, it's the high level of uncertainty in Europe, in Western Europe as well. This has spread over the past few months. After the French elections, we saw an impact on construction activity. Positive initiatives that had been taken by the previous government were discontinued. So a great deal of uncertainty. Same in the Netherlands, where interest payments are no longer tax deductible. All that has led to a slowdown of construction activity, and we feel the effect of that in our operations on a one-to-one basis. This is nothing new for you. These are the forecasts revised downwards continuously since 2011. Even the most recent forecasts shown here have become obsolete because it's going down further in some countries. So we are moving and operating in a very difficult market environment. Another indicator of our business is consumer confidence. As you can see, in some regions or countries, we have arrived at the record low, which we first hit in 2009, and we have to hold our own in this difficult environment. The forecasts, which I'm sure are available to you, are public as well as private forecasts. In the United States, according to these forecasts, growth is expected at a rate of 20%. The figures for Europe haven't been adjusted to the most recent developments yet. But let's take a look at our own assessment. As shown on this chart, it's different. Our own assessment differs from the public assessment. We take it that the growth rate in single-family housing construction will be 12%, because that is the most important segment for us. In Europe, however, the map looks quite different. According to most recent assessments by our own management, there is a single market that shows a positive trend, that is Germany, a slow growth rate of 2%. All the other markets are shrinking by double-digit figures in some cases. Central and Eastern Europe has been hit hardest because the level was low already and the decline continues. Markets that used to be stable, like Poland in Eastern Europe, are also negative now, with a 10% decline in residential construction, single-family houses in particular. What has changed in Western Europe compared with our assessment at the beginning of this year? In the Netherlands, unfortunately, our forecast has come true. a significant decline and slowdown of new residential construction activities in Belgium, the Netherlands, and France. France in particular after the last elections, and in Belgium after the formation of the new government. The market situation has declined. However, it may be cold comfort for all of us, but let me tell you that we are doing rather well in all these markets. We've been able to increase our prices by more than the rate of cost inflation. And when you look at France or Belgium, we are continuously gaining market shares in our segments. The renovation business is important for us, particularly in the roof tile segment. The renovation rate in the roof segment is high. It's also due to the fact that new residential build is dormant. 80% of our roof tile sales go into renovation projects. This is why we have to look at that very carefully. And measures that were taken by governments 1 or 2 years ago, support for renovation, tax credits, whatever. Some of these measures are being discontinued, or their discontinuation is being discussed, and that has an immediate impact. A slight decline also in Germany in roof renovation has been forecast and confirmed during the past few months, and it's going to continue throughout this year. This is a chart which I wanted you to see because it illustrates very well how forecasts develop. We as humans tend to be optimistic. Those were the forecasts by experts for the American residential construction market. A downward development and then a hockey stick pattern. All experts expected things to improve, but nevertheless, it's been going down, 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 with only a slight recovery very recently. So we have to adjust to that situation. Wienerberger, over the past 3 years, has repositioned itself. We have strong brands. We are strongly market-oriented and sales-oriented. With our brands, be it for wall, roof tiles, facades, pavers, or pipes, these brands help us adjust our prices, increase our prices, and given the current market situation, this is indeed a strong signal. We've succeeded in increasing our prices by 4% on average. So we are operating in a difficult market environment in Europe, no doubt about that. This has led to a volume decline, but we've been able to adjust our prices. We have a positive environment in the United States and a satisfactory development in Russia and India. Pipelife has been fully consolidated since the 31st of May. Willi Ried will speak about the detailed effects. And as far as Steinzeug is concerned, we have double-digit growth rates in terms of EBIT and EBITDA. With this, I hand over to Willi, who is going to present the results. A cordial welcome also from my part. The 9% organic volume decline has been reflected in our income statement. You shouldn't forget that when we compare the first half of 2012 with the first half of 2011, we had a much better result in the first half of 2011, which was mainly due to weather conditions. We had a harsh winter. We were lagging behind in the first quarter, but we were not able to make up for that in the second quarter because of the decline in volume. This is reflected in capacity utilization, in sales, and revenues. Pipelife is included for 1 month. Pipelife contributed 80 million to revenues and 8 million to operating EBITDA. We have a smaller operating result, a smaller EBIT. We don't have the one-off effect of the Bramag-Tondach swap. We sold 50%. We swapped 50% of Bramag against 25% of Tonbach, and we got 40 million in cash on top of that. That was a one-off effect last year, which we didn't have this year. One thing we did have, and you will notice that in the financial result, because that's to do with Pipelife, we have 42.3 million, a revaluation, an addition to the valuation of Pipelife. So the accounting value has been adjusted to the new market value, which we paid for the second 50% to Solvay. It's nothing but an accounting revaluation. We got no cash for that as we did last year. So it's a pure accounting effect. Then income from investments in associates, 5.4, better than last year because Pipelife is included for 5 months, and Pipelife was doing well for the first half of the year. Interest income slightly higher, as unfortunately is interest expenses. We swapped the cheaper bonds of previous years against slightly more expensive bonds, and we have a negative carry. We get nothing at all from the banks. It's a kind of insurance for us to have enough liquidity. That is getting more and more expensive. We placed the most recent bond at 5%. When we deposit our money with the banks, we get almost nothing. So it costs us 4 to 5%, but we need the cash position because we have to be prepared for possible or impossible euro crisis. This is something we have to put up with. Also included here is 1 month of Pipelife, the financing of the acquisition price and the Pipelife results themselves. So we have a positive financial result because of this one-off revaluation, and the result before tax is 28.9 compared with 45.8 the year before. Profit after tax 24 compared with 37.5. A breakdown by region of revenues and EBITDA. Northwestern Europe is still our strongest region. 37% contribution to revenues, 58% contribution to EBITDA. This is because the region is very strong in the roof tile business. We're doing well with our roof tiles in this region. Central Europe has stabilized, Central and Eastern Europe, a 25% contribution to revenues and 25% contribution to EBITDA. It was higher in the past because our plants were more profitable there, but for the time being, the market is what it is. But it's still acceptable, accounting for a quarter of revenues and EBITDA. Central and Western Europe accounting for 19% of revenues and 15% of EBITDA. That is a segment in which results are generated mostly in the second half of the year. That goes for both Germany and Switzerland. Pipelife, 8% of revenues and 8% of EBITDA for just 1 month. Results broken down by product. We have a broader range of products in our portfolio now. Plastic pipes, that is Pipelife, 8%. Pavers, 9%. Facade, 24%, roof, 22%, and wall, 32%. So our business is not just products for walls. We've greatly broadened our portfolio. When we look at EBITDA, roof tiles contribute 46% to EBITDA, despite the shrinking of markets in the Benelux countries and in France. Wall products, 31%, still strong. Facade, that is facing bricks, 17%. That reflects our American business. For the first time, we've made the EBITDA break-even point. This had been our plan already last year. We took savings measures, but still the contribution to EBITDA is only 17%. Contribution to revenues is 24%. Pavers are weaker because this is mostly Eastern European business. If I may summarize that, changes in EBITDA by region, our two strongest regions, that is Central and Eastern Europe and Northwestern Europe, were both suffering from a weak first quarter due to a harsh winter and shrinking markets. We lost 18 million in Central and Eastern Europe and 10 million in Northwestern Europe. Central and Western Europe was doing rather well. Switzerland slightly weaker due to specific conditions there, and Germany stronger. North America plus 5.6%. Last year we were at minus 5 million EBITDA in North America. Now we've made the break-even point. Pipelife plus 8 million and investment and other minus 3 million. Working capital. We managed our working capital in a difficult market. In the first quarter, we had no way of knowing what the markets would be doing. Is it all weather-related or is it due to other factors? Nevertheless, we succeeded in keeping working capital under control. The increase is not as strong as it was last year, despite lower sales volumes. Normal CapEx, almost the same as the year before, plus 2 million from Pipelife. Minor consolidations effects are contained therein. I'll tell you later what we plan to do for the coming year. Divestments and other. That's last year was impacted by the Bramag transaction, which generated cash, which we don't have this year. This is why we have a negative cash flow of minus 29 million. Growth CapEx 157. That includes Pipelife 146. It's minus cash which we got, and the dividend and the hybrid coupon, that is the dividend on the results for 2011. The hybrid coupon, 32 million to be paid in February, minus a dividend prior to consolidation has been netted here. That's the dividend for Pipelife. That is the net cash flow for the year. Actually, the acquisition of Pipelife was accounted for in May, end of May. Trade receivables, the overall picture is better than the year before because of better working capital management and lower sales. Nevertheless, trade receivables are doing quite well. We have things under control. Inventories increased slightly. It's difficult to do something about production in the second quarter already. This is why we had to put up with an increase in inventories. Now is the period for production because the gas price is lower. We will be taking measures in the second half of the year. Whenever we can see that working capital is too high, we will then do something to keep that under control. Other changes are less significant. So we have a working capital which increased less than the year before. And then total investments, growth investments, including Pipelife, 146 million for Pipelife. I mentioned that before. And normal CapEx. This is not just maintenance and replacement. It's also the acquisition of new equipment, grinding equipment we need for infill bricks, etc. So we are investing in growth and in new products, and our plants are being maintained as necessary. The capital structure, our net debt through the acquisition of Pipelife and through the additional debt we took over with Pipelife at a point in time when their working capital was highest. And same for Wienerberger. Traditionally, our debt is highest in June because we're building up working capital in the first half of the year and reducing working capital in the second half of the year. So we are a seasonal business. So 880 million net debt, but we still have a strong equity ratio of 54%. So we are still doing well and very well capitalized. And working capital, as I told you, this is a seasonal development. This is the detailed development of net debt between the end of the year and the end of the second quarter. 81 million gross cash flow, as you can see here. We invested 33 million. That is money which went out. And we have the Pipelife effect, the acquisition price, plus the Pipelife debt. You know, in the past, Pipelife was not consolidated, but included at equity. So we have 100% of the purchase price and their debt on our balance sheet. That means 340 million. Dividend paid out in 2011, plus and working capital. We already recovered 43% from working capital, and then minor things. So 880 million altogether. But the increase is almost entirely due to Pipelife. The rest we had well under control, and we will continue along these lines. Our liquidity is okay. We have a balanced term structure for 2012. These are the figures as of the 30th of June. Whatever else is going to mature in the course of 2012, for that we have already the cash available, and we're going to generate further cash in the second half of the year. Nothing will mature in 2013. In 2014, a bond issue will mature in the volume of 250 million. So we have a very balanced term structure, and we hope to continue managing that in the same way by sticking to our financial discipline and by maintaining a balanced term structure. We will go to the market whenever we feel that there is a window of opportunity. So we do not exclude the possibility of floating another bond issue in 2013. We've always been active in the market. That is a normal procedure for us. Our treasury figures, net debt relative to operating EBITDA 2.9. We are well below, comfortably below the 3.5, and operating EBITDA relative to interest result is 7, which is well above the 3.75. This is always calculated on a revolving basis. Our target level is a net debt at the end of the year of less than 2.5% of operating EBITDA. So we're working on that. Perhaps a brief excursion into purchase price allocation. We acquired net assets of 182 million. We did a purchase price allocation. In fact, certified public accountant did that for us. We had our customer base valued, our real estate, and we made provisions for possible exposures. So we tried, and we will continue trying to refine that, and it will be finalized by the 30th of September. What remains is goodwill of 43 million, minus cash and cash equivalents, and the fair value of our own portfolio, that is a comparison between the 162. So our own portfolio would be 140, and the net payment for the acquisition of companies was 146 million. The valuation of 42.3 million, that's a valuation effect which we need to do because of IFRS. So a goodwill is 43 million, and that gives us a strong position and a strong basis. Thank you very much.
Thank you very much, Willi. I would like to give you a brief overview of the regions. Some of these figures have already been mentioned, and we can discuss details later on. Central East Europe, a very important region. It includes the brick business of Wienerberger, as well as the activities of Semmelrock and the 50% consolidated Dondach Group. What has changed in this region between our assessment at the beginning of the year and today? The most important market in this region is Poland. Unfortunately, we found that after major sports events, the building industry shows a decline. This is also true for Poland. Together with the European Football Championships, there was a decline in building activities. About 10% when it comes to the construction of single-family homes. So these were the major changes. The Czech Republic again showed a weakening. It used to be stable at very sound levels, and what I anticipated at the beginning of this year actually happened in Hungary and the rest of Southeast Europe. There was a decline from already low levels when it comes to residential construction. So EBITDA decreased by 41%. That was the sharpest decline. Over and above that, Semmelrock is also facing difficult market conditions, a market environment, and Dondach, Kleinstetten, was weaker. This is due to seasonal factors and also due to the harsh winter, which had a great impact on roofing activities in Eastern Europe. There are also positive results. Our Russian business is very positive both in terms of revenues and EBITDA. We have 2 production sites near Moscow and another one in Kazakhstan, and our products are well accepted by the market. Northwest Europe, a very decisive region in Europe for the ceramics business, particularly the roofing business. Here the decline was more moderate. One of the reasons being that in this region we succeeded in increasing our prices to compensate for cost inflation. Declines were noticeable in France and Belgium, the reason being political changes and increasing uncertainties in the building industry, particularly in the renovation market. And unfortunately, in the Netherlands, there was a continuing negative trend, so we are below the levels of 2011. Central West Europe, there was a weak start in Germany and Switzerland because of frost and harsh winters. As a result, the first quarter was not positive. There were hardly any building activities. And in the second quarter, it was not really possible to catch up for that. So there were no additional activities in Switzerland. There was no increase in the headcount. There were capacity shortages, particularly in the roofing segment. As regards the total segment, Germany and Switzerland, we expect that the second half of the year will be positive and the overall performance of this segment will correspond to that of 2011. North America, as you've seen, on the basis of what I said at the beginning, we now have a positive EBITDA. In the United States, we have achieved the turnaround, and data from July and August confirm this trend. In North America, we expect this development to continue, irrespective of the presidential elections in November. We expect a positive EBITDA this year. Investments and other. Here we have Pipelife, Steinzeug Keramo, and the Indian clay activities. All those made a positive contribution both to revenues and the EBITDA. Cost development was less favorable because we had development costs for the ceramics business in Europe. However, we feel that these are investments in the future, so we will try to cut back here. Pipelife. Pipelife, of course, was the most important factor for developments in the first half of the year. Let me recall that Pipelife is one of the players in Europe in the plastic pipe segment. It's particularly strong in Northern Europe. Pipelife's business is focused on Norway, Sweden, and Finland, where Pipelife has a sound market leadership and a well-balanced portfolio. The Netherlands and France are also strong markets for Pipelife, and of course Austria also plays a major role. Here the revenues, Northwest Europe, the Nordic countries and the Netherlands account for almost 60% of the revenues, so there's a strong focus on markets that are quite solid, also in terms of the business environment, the economic climate, and Central and Eastern Europe also plays an important role, but less so than in the brick business. The United States and North America account for about 5% of the revenues. So in the North American market, Pipelife has a very good niche position. It is strong in the sewage and rainwater management. It offers future-oriented solutions for sewage pipes, wastewater pipes, stormwater pipes. It's also strong in the utility sector, gas pipes, for instance, but also electricity. Then buildings. Here we see a potential to improve our overall competence in providing complete solutions. And then there's a niche segment, the natural gas and oil industry, where large diameter pipes, long pipes are among the major products. And Pipelife is the leading company. This chart was not produced by Wienerberger. I simply want to show you that the management that took over in 2009 has pursued a very consistent, careful strategy. There were two major transactions, Steinzeug and Pipelife. You can see that we are clearly below the multiples, that we paid less than the usual multiples. And as I've already indicated, the performance of these two companies is indeed positive and have contributed towards added value. Both these companies are clearly below the average CFROI of Wienerberger, that is above 10%. A brief summary of pipe life. A very positive development in the first half of this year, and as already indicated, because of the economic trends, there will be a slight decline in the second half of the year. You will get the details, but let me briefly report on new segments. We will continue to focus on the clay building materials. We will distinguish between Western Europe and Eastern Europe, which is logical. And then we will have the overseas activities, and we will have both the United States and Canada in that segment. Then there's a new segment, pipe and paver solutions. Here we have the growth drivers. Exposure is different. Here we focus on infrastructure, on renovation, and again we subdivide between Western Europe with the strongest markets and between Eastern Europe and overseas, and in this case it's only the United States where pipe life is operative. And in line with our new accounting regulations, we will consolidate Tondach and Schlagmann. We only have a 50% holding there. You will also find the holding costs there and our real estate activities. So this falls under the heading investments and other. Now, this does not mean that we will become active in the real estate business, but we have shut down a number of plants, and we have real estate which we do not want to sell at a loss. Rather, we want to make use of them in the coming years, and we are making plans for that, for their utilization. Next, the risk scenarios. In recent weeks, we tried to consider what might happen in Europe. After all, 90% of our revenues are accounted for by the European Union. So it's important to be prepared for whatever scenario may come up. And I was happy to hand this task over to a colleague from Belgium. Belgium, after all, was among the founding members of the European Union. So I hand over to Willy. Well, we looked at a number of different scenarios, trying to anticipate what would happen or what might happen in the Eurozone. And in fact, we developed 4 scenarios. A quick resolution of the sovereign debt crisis. We feel that probability for this solution is low. Then another approach that would be muddling through, taking 3 steps ahead and 2 steps back. This is what we're doing at the moment. Then Brexit, meaning Greece leaving the Eurozone. We believe the probability here is moderate, and finally a possible Eurozone breakup. So we have tried to look at the effects on the Eurozone. Of course, the impact of this Eurozone crisis should also affects our business, consumer confidence, first and foremost. But even a Brexit, we expect, will not have a major impact on Wienerberger. The reason is that we only have a small plant in Greece, and we expect, or we estimate that the Greek exposure is less than 5 million. The Greek plant produces only for the local market. There are no imports and exports, and we have a very low exchange risk. So the risk or the impact is fairly low. 95% of Wienerberger debt is euro-dominated. So if there's no longer a euro, well, we will have the shilling or the Deutschmark or whatever. And we will have a strong European currency. Our deposits, our bank deposits, are very flexible. That is to say, we can shift them very quickly. And there's very little need for refinancing between now and 2014, and we also have revolving credit lines in the amount of 250 million, which have not yet been drawn. So with the exception of risks regarding foreign exchange rates, the risk for Wienerberger is low. We produce and sell our products locally, and there will only be very limited impact on our balance sheet. So I think all we need to do is use our common sense and respond adequately. And furthermore, we don't have many cross-border businesses or business activities. That is to say, there are hardly any exports. And let me also remind you that there was a time before the euro, and we did well at that time. We were always able to do successful business. So I don't see that the world or Wienerberger will break down or collapse. Thank you, Willi. In view of turbulent times and all those disturbing news about Europe, let me try and venture an outlook for 2012, or the remainder of 2012. Let's take a look at our markets or businesses. Let me start with the European clay business, which is faced with major difficulties. We've seen that stable markets, Belgium, France, United Kingdom, Poland, and the Czech Republic showed a slight decrease, and there has also been a decline in Central and Eastern Europe. So, what are we going to do? I'll briefly describe that. We have managed to adjust our prices, to increase our prices despite volume declines. In the first 6 months, we have already taken measures to optimize costs, and we will continue to do so. As regards investments, we will proceed carefully, prudently, and Willi has already mentioned that we will have a stringent working capital management and inventories management. North America, here the situation is somewhat better. In our core markets, single-family homes and multifamily homes. So we will have a positive EBITDA. In Russia and India, there's great demand for our products, and I assume that we will get positive contributions from these two regions. Pipelife has shown an excellent development in the first half of the year. The same holds true for Steinzeug, Keramo. I assume that developments in Northern Europe for Pipelife will be good. There will be a slight decline in Central and Eastern Europe, but Steinzeug and Keramo are expected to have double-digit growth rates again. Pavers, here we have Semmelrock, similar to the brick market in Central and Eastern Europe. There has been a volume decline. We have already launched measures in order to control these developments. So, as a company, we are prepared. In 2009, we led our company through a crisis. We restructured our company. We started repositioning the company in terms of production processes and administrative structures. So looking at performance, the market shares, costs, earnings in individual markets, we have been quite successful. Now the second step needs to be taken in restructuring our business. Over the last 15 years, Wienerberger has grown rapidly. There were many acquisitions, SMEs among them. Now we consolidated our structure in the clay business. Our holding costs went up as a result of combining a number of product groups. We want to be a strong company throughout Europe. We don't want to have individual national structures. We rather want to combine these units in order to achieve synergies. This will require a large number of individual measures and steps which we have defined. We now have a common IT platform. We have had process optimization, and this will mean or potential cost savings of 40 million between now and the end of 2013. Of course, this will also involve costs because we need to change some of the structures, our overheads or plant structures in Europe. So this will cost us 15 million euros. That means 7.5 million this year and another 7.5 million next year. So we will have cost savings of 10 million this year and 30 million next year. So much on our restructuring and cost optimization measures in the clay business sector in Europe. This, of course, is also linked with normal CapEx, which includes all investments such as new products, etc. So including Pipelife, we want to reach 110 million by the end of the year, as opposed to the 140 million that we had planned. And as regards working capital, exclusive Pipelife, we will also make a reduction and reach the level of 2011 or go even below that. Pipelife, anyway, has planned a very intensive working capital management. All this will mean a maximization of free cash flow. So this is one of our messages. We focus on cost savings, and we will also focus on free cash flow. So this is the important message. We want to make use of this restructuring and cost savings potential. Another important point for us, of course, is innovation. The new products that I've mentioned, filled-in bricks, Tri-Fix, etc. All these products have been successful and have contributed towards our earnings and gaining of market shares. So despite a difficult market situation, we have been successful in this regard. When it comes to sales, we have started a restructuring of sales organization. We want to become more service-oriented. We are focusing on training of our sales staff, monitoring the setting of clear-cut goals. We want to have a modern distribution system throughout Europe. We have more than 1,000 employees in our sales department. And, of course, in uncertain times, we also need to focus on marketing, sending clear messages to our customers regarding modern, energy-efficient building materials. And again, I see positive signals from the various markets. in France, for instance, we are gaining market shares, which, of course, is very important given the economic environment. So we will also be able to do value pricing in the future. And this is important for us because we benchmark our company with our competitors. And according to the experience gained, we can say that we are outperforming our competitors. A summary of the outlook: we assume that in Central, East and Northwest Europe, due to weaker housing markets, there will be a decline in revenue and earnings for the entire year. However, cost inflation will be covered by price increases. The cost inflation will be around 3.5% for the entire year. Regarding Wienerberger and the effect of the Pipelife takeover, we will we expect approximately 480 million revenues, about 40 million EBITDA contribution, and then we have the 42.3 million one-off effect included in the financial result. Our target, of course, is to further reduce our working capital to below last year levels. Net debt, as a result of these measures, will be significantly below 2.5 at year's end, and normal capex will be cut to 110 million. So we feel that we are well prepared for whatever may happen. And we are cash-oriented for 2012. So actually, we have looked at all possible scenarios. We have a strong capital structure. And what is also important, we continue to invest. We invest in marketing, in sales, because we expect Wienerberger to be something like a natural consolidator in this segment, and we expect to gain additional market shares in the future. So, if you want to hear my personal opinion, I would say that the results of the first half of this year are satisfactory given the market situation. We are working hard, and we find that we have taken the necessary measures in order to be prepared for the future. So having said this, I think we will be able to realize these 40 million this year and next year. I expect your questions, of course. So let me say that we will be able to save 20 million of these 40 million. So when we reach the capacity utilization of 2011, where we will have to add 20 million, these will no longer be relevant for the future. That is to say, we will again be able to achieve sustainable cost savings. So in this very uncertain market situation, I think Wienerberger is well positioned. Thank you very much for your attention.
Could you give us an idea about the number of plants to be mothballed and in which markets? You talk about cash costs of 15 million. Will there be any non-cash costs like impairments? As regards mothballing of plants, Well, I have to ask for your indulgence there because this is an issue that has a social component. We're going to communicate the details later on, but it's not going to be major measures. It's rather a change in shift models or perhaps shifts in production, but it's not going to be in the same order of magnitude as in 2009. As regards impairments, we're going to look at that in the course of the third quarter. We have already done that for goodwill. The major parts of our goodwill are in the Benelux countries, France and the United States. And these are markets which are performing quite well. These are not the weak markets. When it comes to impairments, we will be looking at individual plants, which we may have to adjust downwards, but that will happen on asset positions. But I don't think that the amounts involved are major ones. A few questions about Pipelife. Will there be PPA effects? Or a write-down will be a guidance for the full year. Will there? You just excluded any demand for impairments, but could any impairment be required as far as Pipelife is concerned? Do you have an earn-out or a reverse earn-out model, or is that no issue for you? No, we have no earn-out model. We've been in a joint venture for 20 years, so we know what's happening. There will be no impairment because we have time until the 30th of September for the purchase price allocation. And if there were to be an impairment, we would consider that in the opening balance sheet. And I don't see any such issues coming up. But let me put that into perspective or clarify that. I think I said rather clearly that Pipelife's main markets are in Northern Europe and they are still performing well. And the other markets, there is indeed a slight weakening. So there will be no reduction of the allocation. When you look at goodwill over 10 years, well, we're going to communicate that once we know the definitive figures. Part of what has been capitalized is the customer base in the core markets. And a second question, you spoke about 147 net cash out. You showed us the net debt bridge. So that would be 340, the total Pipelife effect, and the net debt was 190 million. No, that was the gross debt of Pipelife. And how do you account for the volatility? Same as in our company, build-up of working capital. The raw material is oil-driven, and that has an impact on the balance sheet, and the item will go down again. But the volatility is higher than in Wienerberger. No, it's just as high as in Wienerberger. And the 2.5 times leverage is on a full-year basis for pipeline. Well, we generate free cash flow from 200 million for the full year, so we can make the target. And the consolidated EBITDA figure is less than 2.5 leverage. Would you confirm that also for Pipelife? Well, it may be slightly above or slightly below, but we certainly will be below the 2.5 for the full year. And the net profit target, does that include the book gain, or would you make it into the black figures also without the book gain. Now, I prefer not to say anything on that now. We do it all transparently, and I take it that we will make a profit at the end of the year. A question about savings, 40 million by 2013. You said that you expect a weakening of markets by the end of the year. 2013 is uncertain. We don't know how the political problems are going to be solved. But the 40 million, if you look at the operating leverage, that seems rather optimistic. We might have a kickback in the market in 2013, and maybe you decided to save less or to mothball fewer plants in order to benefit from a possible upswing next year. Well, for us, this measure is aimed at integrating our ceramic business in Europe. We want to create better structures, and the 40 million, given the current market situation, a current figure. Anything that would go beyond the end of the year would be pure speculation because visibility is extremely low. In some markets, it's not more than 1 month. In others, not more than 3 months. So I don't want to engage in speculation. But we do have a plant structure we can live with very well. We want to cover the regional markets we operate in. We don't want to lose market shares, and this is why we want to maintain our structure. Of course, nothing is inscribed in stone. We do impairment tests regularly, and we also look at our operations very carefully to see if and where there are any problems, and will do so also in the future to see whether it makes sense to be present in one or the other market in the future. This is something you need to check again and again. But from today's point of view, the measures we've taken constitute a decisive step towards improving our ceramic operations. A second question. Could you tell us about your level of capacity utilization in your plants? You said that you have real estate activities. You want to sell plant facilities at a profit that have been closed down. Are there any plans to completely close down plants that have been mothballed? Are you intend to sell these? What are your plans? Well, real estate, yes, but it's not a strong market currently in Europe. So we look at the situation. We don't really need that for our balance sheet. We're not going to sell at any price. These are facilities that have a certain value, and we don't want to sell below that value. A plant that has been mothballed is a regional presence, which we still have. We're not a real estate company. We're going to do what we did in the past. That is, look very carefully at the sustainable, lasting value and of a particular facility, and will do what we think is right, but we won't act under pressure. Level of capacity utilization last year, it was 65%. It will be less this year because we will have a volume decline for the full year. We don't know yet where we're going to be for the full year. We only disclose capacity utilization levels for the full year. Otherwise it doesn't make sense. A follow-up question on pipe life. Year on year, we saw an increase of the EBITDA margin of 1%. The 9.5% in pipe life is due to the consolidation effect that is not sustainable. So will it drop to the traditional 8 or 8.5%, or have you succeeded in making Pipelife more profitable? Well, again, this is not something you can tell on a quarterly or on a half-yearly basis. We're going to look at that at the end of the year. Pipelife is taking all the measures that are necessary to improve its business and its structures, and I take it there will be a certain improvement by the end of the year. Any further questions? You increased your prices at the beginning of the year. Is there increased price pressure or pressure on prices in certain markets? Well, the price effect is higher at the beginning of the year and becomes less over the year. And it's always to do with the comparative effect. Cost inflation is 3.5%. We will certainly be able to cover that. Fundamentally, we don't see a trend of major significance. Of course, when you have countries like Poland or the Czech Republic that are declining, we may still offer products at special prices under a campaign here or there, but this is not something that will have a major impact. A question about the United States. Things are better in the United States. Are you planning to reopen plants that were mothballed? Well, I think we said already last year that capacity utilization in the United States is around 50%. You can easily cope with 20% growth. You don't need to think about additional shifts or anything of that sort. We still have a lot of potential to use up. Operating at such a low level, 20% growth sounds great, but we are starting from a low level and we still have stock to use up there. We're not running out of bricks in the United States. You are planning to reduce your stock level. That means you're going to cut production further. How about the contribution margin? Will that have a negative impact on profitability? Well, as you all know, you can manage working capital, but we haven't set ourselves a cutoff date by which our working capital must be such and such. Of course, we look at production costs and at what the plants are doing, how they are performing. They're all performing well. They have good cost structures. We are going to look at the situation in the second half of the year. It also depends on when the winter sets in. Sometimes it's better to produce in advance and not to start production in February, which may be the coldest month of the year, as it was this year. In Eastern Europe, for example, we had postponed the reopening of plants into March because it was too cold in February. That would have been extremely expensive considering natural gas prices. But you have to have a certain flexibility, even though it costs money. We'll have to wait and see whether this is going to have a major impact. But basically, we take it that we can reach our targets for the second half of the year without any major impact on the contribution margin. One brief question on capacity utilization. and maintaining a regional presence. I know it's an important topic for you because you want to gain market shares and maintain a strong position in the markets. Under what circumstances would you further reduce your capacity? And maintaining a regional network costs money and has a negative impact on profitability. Well, let me give you some examples. Southeastern Europe, for example. We have a structure there with one plant in Croatia and one in Slovenia. That's it. We have reduced our overheads, optimized our overheads, and any further step would mean exiting from a market because you can't transport bricks that far from Hungary, for example, to Croatia. That would be a decision to leave a market, to exit from a market. In markets where we have several plants, Western Europe, Germany, for example, Benelux countries, or Poland, there we might think about shifting production. But there is a limit to shifting production because if you have to transport bricks over 1,000 kilometers, it will not pay off. You have to consider your marginal costs. You have to be flexible in terms of overheads, and this is what we are doing also in conversation with our staff. We are very flexible, and we will be even more flexible in our production. Thank you very much. Thank you very much for your interest.
Barbara, vielleicht fühlst du noch an, genau wann der ist für alle?
Well, there is going to be a management meeting on the 6th of September in Vienna. I'm afraid we couldn't hear the speaker.